Joe Montesano, if you're in Wall Street, you certainly know who he is. I think what was most surprising to me about your story, citing people familiar with the situation, not just that he's leaving, but that at one point he was probably earning more than his boss, David Solomon.
Yeah, and that's the point we make in the story. Over the last 3 years, if you look at the cumulative pay, he was among a group of people whose pay rivaled that of the CEO of the firm, David Solomon. That's not always a big list, but at a place like Goldman, think of it as an accordion. In really wildly profitable years, the number of people who are probably out earning the CEO grows, and in not so good years, it probably shrinks a lot.
Absolutely.
But it also gives you a window into how wildly profitable, what a windfall it has been for trading desks over the last 3 years and the kind of money that they've been able to make when you're talking about one executive who's not the CEO, who's not the president, who's not a division head, and yet making somewhere in the ballpark of 75 million or more over the last 3 years.
He was head of Equities Trading Americas. What exactly did he do there?
He was clearly one of the most important equities executives. And what is important in the competitive landscape when you look at it, over the last 2 years, Goldman Sachs has actually finished #1 in that business, about 11 billion in revenue in 2022, 11.6 the year before that. Typically, at least pre-pandemic, Morgan Stanley had firmly entrenched itself as the top equity franchise. That has changed in the last 2 years.
But it's a program trading desk at Goldman. Explain what that is.
And that's also an interesting aspect of Montesano's career at Goldman Sachs. Aside from just being the equities trading head in the Americas, he also had global remit over this business called the program trading desk.
Yeah.
It is this highly lucrative business that more broadly on Wall Street is known as the index rebalancing business, where you're anticipating the changes to an index, what names will get into an index, what names will be kicked out, making wagers based on that ahead of the event and hoping to profit from it. That business made a lot of money in 21 and 22 by some estimates. 20 and 21. In 2022, it cooled off a little because it's also gotten very crowded and competitive.
Well, that's what I'm curious about. I mean, I think you cited in your story that this was like the most revenue per employee of any other team in the business at the time. But of course, this is sort of that eat what you kill, and he may be up on 1 year, and then the next year might be the investment bankers or somebody else here. Is there a sense here that trading book and more importantly, that whole division here can't necessarily produce those same gains given how much the market has changed right now?
And that will be the big question on the talent front as well.
Yeah.
We have seen both in fixed income and equities, big gains in 2020, in 2021, still posting big numbers in 2022, way more than what they were doing pre-pandemic. And of course, all of these people were rewarded for their performance. But does the forward 3 years look anything like that? Probably not. What that means is pay will also likely come down in line with performance. And when that happens, is the threat of the buy side again poaching away the top banking talent resurface.
Do we know anything about where he might end up?
As of now, we understand that he's taking a break. He hasn't lined up another job.
Spending time with family.
But at the same time, he was also part of a business where we have reported in the past the non-competes can be pretty strict and lengthy.
Yeah, well, he's got some time. And, he can just throw all that money into a CD for a few months and he'll be good to go.